All right, guys. Good afternoon. Good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is just before 5 o'clock on Friday. Hopefully, everybody had a great trading day. It is time just about for the weekend, and as I've said before, I like to do these end of the week videos. They're public. And of course, we make our member videos on the weekend where we kind of go over more in detailed macro views, and then we begin to go over single stocks and setups for the week. But this is a nice review, as always, on Friday to take a step back and look at what performed for the week and just overall thoughts before we finish up and close the books for the week and get on to some rest and relaxation and then kind of set up for next week. So first things first, everything that we're going over is information purposes only, not giving out any advice, recommendations, anything like that. And let's talk about this week's performance first before we talk about today's price action. But I thought it was kind of interesting because I would have thought that we were actually up for the week, but we actually finished down for the week. SPY finished down 1.3% for the week. Actually, this should be in green. IWM actually outperformed for a change, believe it or not. IWM small caps actually outperformed. The Qs were down 0.7%. If you look at this, like I said, I had a look to see. From where, remember how we finished a week ago? We finished very strong. Remember a week ago, we kind of like took off like a rocket into the close. Kind of a little bit of that today too, but and then we started the week down. And we basically, like, if you look at SPY, we did close, higher than where we finished on Monday. But just remember, we got a little bit, a little bit ahead of ourselves on Friday. So that's the performance for the week in terms of indices. SPY down 1.3%. Diamonds were down a little bit more than that. Maybe some of that is Boeing. The Qs finished down as well for the week. EEM and EFA both underperformed again. Well, I wouldn't say underperformed. It's kind of very close to in line with SPYs. And then bonds and gold were the outperformers this week. So again, kind of interesting when you look at these numbers because I thought we had like overall a pretty decent week. Well, we did have a pretty decent week trading, but just in the overall performance, it's kind of interesting because most of the things that I'm playing are to the long side, and I'm looking at dips to buy and levels of support to trade against. And then if we look at the sector performance for the week, again, interesting here as well. Gold miners were the best performer, up 13.3%. We did catch one of those this week. We were long gold. That's a name that I've put on a couple times in the last couple of weeks, and we hit that trade right. And then you had the oil names, right, with all this mess about USO and and blaming USO and so forth, which I'm not going to get into in this video. But really, what got wasn't really looked at too much, kind of under the radar, was how well the energy stocks did this week. And XOP finished up 10.5%. That's your best sector ETF if you remove GDX from the equation, or gold miners. They're not really a sector. And then you also had the FANG stocks. The internet FANG stocks do very well. And then you've also got this in here, and then you got biotech putting in another week. Regional banks actually were up on the week. They outperformed as well. Retail did fine. That was one of your best performing groups this week. And then on the flip side, kind of a hodgepodge of groups. Aerospace and defense were down 5.6%. REITs, utilities, they were down for the week. Consumer staples. So a couple of things that I've been hearing about with this market. And I think that you really have to do your homework too to kind of understand this, but I've been hearing about how it's all defensive rally and it's the utilities and the consumer staples. Well, this week it wasn't. Those were your underperformers. Those consumer staples and utilities were your laggards for the week. Then the other argument that I've been hearing about, it's just the FANG stocks, it's just these big names. Now, again, remember how this works. These names such as Microsoft, Google, Amazon, Apple, they are the biggest companies in the S&P. So if they are up, they are going to make more of a dent in the index. It's just how an index works. There's no trickery involved or anything like that. It's just basically it's how an index functions. If the biggest names in there go up, yes, they're going to be responsible for the indices gains. Is that the only show in town? No, there's other groups performing pretty well, right? We've talked about several times this week and over the last few weeks. Your biotech is actually the strongest group. So when somebody comes on the TV and they say, "Oh, it's just the FANG stocks," tell like you're welcome to like give them a glance over or come out that you can come at them on Twitter, because that's not the case. Biotech and healthcare are your best performing groups since we made these lows. So you kind of have to just get out of this mindset of people making very simple conclusions to fit a narrative, because it just doesn't always work that way, and that's not the facts as well. So let's talk a little bit about the S&P this week. You know, credit where credit's due. We've talked about our value area indicator, and we've talked about that we've seen a lot of people on Twitter basically, write about, hey, we've made a move up, now we're going to make a move back down. Well, our value area indicator, the market webs, has done an extremely good job at telling us that we're holding the line. And again, it's been choppy for the last week and a half after going after the performance, going over the performance that we've seen over the last week. I mean, really, the last 2 weeks have been pretty choppy, and we're in some indecision right now. So we bounced around. We talked a lot about this too, and if you've been watching our videos this week, we've been talking about how we basically bounced around this value area like a ping pong ball this week. So we'll see if we can actually get above here. I'm not certain that that's going to happen. There's some things that I'm liking in the market. There's other things that I'm not liking in the market. So I think as long as you're doing, have had a similar approach to what we're doing, like basically taking one day at a time and looking at individual stock setups, looking at, before we enter a trade, looking at the support level and saying, hey, here's my stop if the trade doesn't work. Also looking at, pre-planning your trade, basically. That's been the winning formula for me. And I think a lot of traders are doing that in our room as well. And that's been a success. The more that you can kind of plan what your moves are going to be, rather than do that while you're in a trade, because then you can take emotion out of the equation. So I think that's important, and that's basically our edge, right? The other thing that I think traders get used to, like younger traders get used to, because we see this on TV all the time, we see this in financial media, is trying to figure out like what the next move is going to be. Everybody, like I think newer traders and again some of the strategists on TV, they're always trying to figure out, like trying to like bring out the crystal ball and say that okay, this is going to happen. They're going to put a target on, or we're going to retest the lows. The more that you can wipe that from your mind, and because listen, this is the case. Nobody knows what's going to happen on a day-to-day situation. Now we do look for things and clues, and we look at sentiment, and we look at the internals of the market and so forth to kind of give us a little bit of an edge, to try to figure out whether the market looks healthy or not, or whether it's starting to break down under the radar. But for the most part, nobody can predict short-term moves, and the sooner that you kind of get over trying to predict moves day to day, and embrace the fact that nobody knows, the better that you could become as a trader, and basically just looking at levels. So this is something that, for me, I've been playing mostly the long side, and even in here, when we look like we're going to break down a couple of times, I've said, hey, if we break down here, I'm going to buy puts, because we have a tendency when we start to go lower to move faster, but we just haven't had that. We haven't had that confirmation. And if you go back to the 1 hour, it's the same thing. Like, if we start to break down, I'm happy to play this market to the short side, but we haven't done it yet. So that's another like rookie mistake that some traders make, is they're anticipating too much. oh, we're definitely going to break down because people are out of work and the jobless numbers are bad. You have to remember as well, one of the things that goes on regularly is that the market prices in this information. Just like we had talked about with yesterday's jobless numbers, right? That came in that they're bad, but they were in line with expectations. So the market has been pricing this in all along the way. Now, some of the good and the bad with the market, and why I think it's a little bit, it's always unclear, but why I do think it's unclear is, we do people do have to get back to work and spending, and of course, what's been happening in the meantime is the Fed and the government are stimulating. They're throwing everything out this for a short term band aid. So that's pretty much the name how the market's been functioning. And other things that we've been saying for the last couple of weeks is there's some winners in this market and there's a lot of losers, right? So take for example, and why I haven't wanted to play with any of the major bottom feeders, because like if you take a look at this stock, which actually saw a little bit of call buying this afternoon, but it's just not something that I want to be involved in. Take Southwest Airlines is a loser in this situation, right? People are not flying, and it's going to take a while for them to get in the habit of flying again. But this stock hasn't budged, right? It's back to the March lows. So this isn't something that I want to entertain and get involved in. But names like, CRWD, which we're trading today, has made some really nice moves. Of course, Microsoft and Amazon. Amazon, which wasn't much of a mover, but there's winners and there's losers, right? And that's basically our job to find them. So, what else for today's video? I'll go over a couple of things that we talked about this morning. Every day I try to come up with a watch list of names. The only one that I traded out of this group was CrowdStrike, and that did very well. I was watching that name yesterday as well. I did trade names like Peloton, which made a nice little trade for the day. But this is basically how we're setting up our trades. The shop was really nice too today. I went involved, and it's shop is already extended, but clearly, if it's going to do what it did today, I want to participate. So here's our break of value, and I got long right, literally right in here. If you look at the chart, right here was my long setup, and then it extended all the way up. I think I hit a target at 649, which I got lucky, I guess, on this one. 649 was my high target, and then I took the last piece off in here. But and here's the trade blotter, so that every video I always show the trade blotter, so you could see that what we're doing. You could see all the trades that we're doing, but and then of course, the other thing is, as you can see, I've got a pretty busy blotter for the day. There's a lot of day trading opportunities today, so a little bit bigger than a little bit more than normal. And then what I'm also looking to do with the VIX, I'll get to the VIX in just a second, but coming into today it was right around 40, and that still means there's good opportunities to sell premium. So if we're going to move sideways for a little bit, as we've been moving in the last week, I haven't really wanted to sell a lot of premium because I wasn't sure, I wasn't comfortable that we were basically just going to continue to go north, right? If you're selling premium, and let's say you're selling put spreads, you have to be somewhat comfortable that we're not going to go back and retest the lows. So I'm actually doing a little bit more of selling premium now. Like I'm doing that in Home Depot. I'm doing that with earnings. We hit a couple really nice earnings trades. We did this with Netflix, where we sold premium in Netflix. The move that the market makers were looking for was just too large. Same thing with DPZ, Domino's Pizza, and I'll look for looking forward to those opportunities next week because we've got a huge week of earnings. And I think depending on how the market maker is pricing things out, but I think I'm going to continue to sell premium on earnings. Right? That seems to frustrate the most people on Twitter when a name doesn't move on earnings, and people are like, "Oh, they're killing the premium." Well, you could set up a trade for that too. So that's what I will be looking for. I did not do any earnings trades today, but that'll be something that we'll definitely be looking at for next week. But yeah, I did a trade for Home Depot where I sold premium and I bought most of it back today. So That's a big thing right now in this tape as we're going as we're moving sideways and the VIX is still heightened. Speaking of the VIX, look at what this thing did today. So we finally remember last Friday this thing moved down to 38, and then we moved back up a little bit. We moved back to about a 45. Well, look at this thing fell down to below 36 today. So I think that's somewhat revealing. So, like I said, there's some good things. That's a good thing that I view. There's also some there's some things that don't look great, right? Credit spreads didn't completely. They were still. I think they widened a little bit today. Let me see if I can just bring this up. Right. So if we look at this, HYG was down today. So I don't think we're completely out of the woods. And if you look outside and see nobody on the street, or not that many people, that's not a big conclusion to make that we're not out of the woods yet. But credit spreads are still heightened. They are not breaking down yet. So bottom line, and I'll kind of leave you with this for the weekend, is that just continuing to take things day by day. This market is still setting up some good opportunities to trade against support, to take profits at resistance. Not being super greedy, and then you kind of come in and start all over. The next day, rinse and repeat. That's been working really well. For us on a day-to-day basis. And it's really nice because you don't have to go in and to make money in this market. You don't have to really load the boat with risk. The market is moving fast enough where there's plenty of opportunities. And yeah, so going into this weekend, I come in, I'm a little bit lighter than normal. Not normal, but just that's basically what I've been doing for the last few weeks, is just really, really not making sure that I'm not accumulating positions, that I'm taking targets, even some trades. Not every trade's going to work, but kind of taking those off and resetting, for the next week. A couple names that I'm watching next week that just happen to be on my mind. Alibaba next week, again, because next week's going to be a big week of earnings. You're going to have Tesla reports, Amazon reports, a bunch of other names report. But look at this little check back here in Alibaba. This was a name that we were playing a couple weeks ago. I like this move down here, and we'll see. This might be in the weekend video. We'll see. Looks like the new value area support's going to be down here at 204. This won't get highlighted until we hit Monday. And then there was some call buying in JD at the end of the day. So here's what JD looks like. Had a couple days, and notice it's just kind of checking back here. So it's in an uptrend, and I continue to like to buy stocks in uptrends that are dipping into support. So you got support hanging right around here. So I like this, and I like the call buying at the end of the day in this one. So I'll leave it there. Just a couple names to talk about, but we'll have a lot more to talk about in the weekend video. And I don't plug I don't plug what we're my room that often in these videos. But if you want to be a member of Tribeca Trade Group, we have an exceptional group, and I'm very proud of the members and the community that we've put together over the last couple of years. But you could just basically click on here, and that'll take you to our little sign up sheet. And listen, I don't charge a lot per month. It's $129 per month. It's very affordable for the services that you get. And I would encourage you to check it out, to try it, because I think what you'll find in our trading room is something that you're going to get a huge value for that price. Probably what I will look to do in the second half of the year is raise the prices a little bit, because it is a little bit too cheap. But any current members will still have that price. But I think we'll probably move this up to about $149 a month in the second half of the year. Something I was going to do in the beginning of the year, kind of forgot about it. But check it out. And I think what you'll find is that you're going to get top-notch information every day, setups, and as well as a great community to trade with. All right, guys, that's it. Have a great weekend, and I'll see you guys on Monday.